Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for July 7th, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures and head moderator. Each morning we come together, take a look at the market, macro to micro, take a look at the structure of the market, then we drill down to our targets, our trade levels, and our hypotheses for the day. This is a subscription room, so if you're interested in checking us out, send me an email at quantumleapfutures@gmail.com. This is not a commercial venture, so there's no website, no blog, just this live go-to that we do each morning, and then live trading and analysis during the course of the day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, yesterday our main hypothesis was a move up, failure, and then a rotation down towards that 65 and 61. And then a slow grind back up. Hypo 2 was a move up, chop around the 79, and then a move up into the 90s, and then a push up into the 95 area. We didn't quite get there, but basically Hypo 2 played out yesterday. Today we've got news. We had unemployment claims 254 versus 269, so they came in better than expected. Really didn't move the market at all. We upticked what, five ticks or something like that. 10 o'clock Eastern we have Canadian IV PMI and NYSER, Great Britain, and 10:30 we have natural gas. 11 o'clock we've got crude oil inventories. That's about the news scheduled for the day. I'd like to start my day, as always, with just a basic candlestick chart, and using a 9 EMA to 20 SMA. I'm looking for slope and separation and where we are within the trend in the different time frames. You can see that we've had this violation of the trend at the end of 2015, beginning of 2016, but now we're back above the 9 and the 20, near the all-time highs. The adjusted all-time high, 21.1950, is still above us, with the unadjusted all-time high at 21.34. We're starting to look like we're going to get a continuation pattern here, but again, it's early in the month. Going to the weekly, you can see that we are getting the continuation. We had that challenge to the trend that came down and took out this naked cross and then bounced, and now we're getting slope, a little bit of separation, but the trend looks like it's starting to continue to the upside on the weekly. On the daily, we had rolled over, and then we took it all back, and so far we're holding above the 9 and the 20. We're starting to get some separation, but no real slope yet, so more consolidation than anything on the daily. On the 4-hour, we're above the 9 and the 20 again. We took out this naked cross right here yesterday. We're creating a new one right here at 20.88 1/4. But as it looks right now, we're possible continuation, but basically sideways consolidation on the 4-hour. On the 1-hour, same thing. We did come down and violate the trend, but now we're popping right back up, and we're at basically a decision point on the 1-hour in terms of, do we get continuation or more consolidation or rollover. 30-minute, basically consolidation, sideways action. We are below the 20 right now, but we're trying to get back above above it now. We're above the 9 as we speak. And going down to the 15-minute, same thing, consolidation, trying to get above the 20 right now. 5-minute, we are starting to see a possibility of a start of an upward trend on the 5-minute. Don't forget, we've got this naked cross up here at 2095, 75. Write that down in your journal on the 5-minute. So possible destination point, but we are seeing a start of the trend. Okay, taking a look at the structure. We're back above the value area of the microcomposite that starts from March the 17th through to yesterday. The 5-day or 4-day, 5-day if you count the holiday. The VPOC is down here at 79. We've got a lot going on at 79. We've got a microcomposite HVN. We've got the value area high on the microcomposite. We have a 4-day microcomposite VPOC, and we've got a CHVN all at 79. 93.50 is going to continue to be our key line in the sand above us. Well, right there, right now. If we get above it, I'm looking for a move up into that naked VPOC at 95.75. Then on the holiday session, there's a naked VPOC up there at 98. I know most people don't watch the holiday sessions. It's something that I do, but 98 is a target up there as well. And then, of course, the 2100. You know, if we get back below 93 and we fail to get above it and hold, then I'd be looking for a slow grind back towards that 79. And then 73 will remain our key line in the sand below. That separates us from getting into this distribution zone. I thought we'd get to 61 yesterday, but they found buyers at 65, 75 and rotated us. Overnight, we held above that. Our low overnight is 88.50, so we are seeing some upward pressure and continuation. Taking a look at the overnight, you can see that we basically had a pretty balanced overnight. A lot of OTF participation last night, some very large rotations, but basically inventory is neutral to long right now. Our VPOC is running at 92. We're just making a little bit of a move now up to 94, testing this little LVN overnight. Value area is up at 95.50. I am expecting that 95 naked VPOC 95.75 to get taken out. So just start moving our numbers over. 88, 88.50 the low. Overnight high is 98. VPOC is not likely going to change at 92. That's about all the information we need from the overnight session. Let's just move this over, expand this out. All right, so obviously the 93.75 very 93.50 very important. I'm actually going to use the 93.75. It is the value area high from yesterday. 94.50 is the high, but I don't think it's the level we have to pay attention to because we got the naked VPOC at 95.75. So anything above 93.75, I'm gearing for that naked VPOC. It doesn't show up as a line here because I still have my holiday session on here. You can see that you know, the holiday session took that out, but it's still valid because this is not really, this should be in the Globex, but I like to watch it because it did trade during the RTH hours, and we do have a naked VPOC on it at 98.50, just a couple ticks above our current Globex high. Our levels above, they really don't change. You've got nothing really above the 98. There's nothing really to lean on above here. I just want to be long if we're above 93.75 into that 95.75, the overnight high in that 98, with the naked close up here at 2100. Let's move that to the back. And then we've got, and that's, again, that's from the holiday session as well, so take it with a grain of salt. But above the 2150, we've got the 2102, the 2104.50, 2106, and then the big target above is this 2109. you know, a little bit of resistance here at 21.10 1/4, and then 21.15, and then the adjusted all-time high. Our 20-day full session ATR is running at 31 points, so off of the bottom, our daily upside target is, yes, 21.1950, right at that adjusted all-time high for the current contract. So we do have room to get up there. And then above that, our weekly upside ATR target is running at 21.2150. So we have our weekly upside target and our daily just above us, and then we have that measured move at 21.25, and then the next really big target is going to be that 21.34, which is the unadjusted all-time high. Why do I watch this? Because this has a tendency to get equalized. In other words, the new contract has a tendency to take out the old contract high and equalize it. All right, below us we've got obviously the overnight VPOC at 92. We've got the overnight low at 88.50, and then we've got the 86.75, the VPOC shift that we got into the upper distribution. We had a neutral extreme day yesterday, so I am looking for a rotational day today, a possibility of another neutral. That doesn't mean it has to happen, but it's something I'm looking for as a possibility. Below the, you can see this area right here is pretty blunt and needs to be filled in, so we're likely to chop around in this upper distribution and test both sides of this, the overnight high and the value area high, the yesterday range high and the value area high, and the VPOC is likely to be challenged early in the session and just chopped around as we fill in this upper distribution. We do have a significant LVN here at 2083. I'm going to use that as a trade area. And then below it, we don't need this on here. Let me just get rid of that. Below it, I'd be targeting this 20.8050, which is just in front of this 20.79. 20.79 is the real destination, but because we've got this this kurtosis here and an HVN, I'm going to front run that 79 and use 80.50 as the target below the 83.75. And then we've got another distribution, LVN down here at 76. And then the value area low is 74.25, but I'm not going to use that. I'm going to use the key line in the sand. I'm actually going to move this down to this LVN right here at 71.75. That will put us below the 73, below the 4-day microcomposite value area low, and make sure that we have a true break of the key line in the sand. And then below that, I'm going to be targeting this HVN down here at 70.25, and then I'll push down to the daily downside ATR target, which is down at 2067 and right near that 67.50 that we were watching the other day. And then we've got the RTH low at 65.75, and then everything below that is going to be down here at the 61, back into this HVN and back into this area of undetermined fair value, with everything centering around the composite VPOC at 2042 and the microcomposite VPOC at 42. Once we get fully back inside of this value area and in this distribution zone, I'm expecting to chop around here again until we get clear maturity of the profile. Below 61, of course, we've got the 54.25 CLVN, then 5250. Now remember, 5250, if I bring in the Globex, you can see that this 5250 is actually the composite VPOC. So we have basically almost a 10-point spread between the RTH composite VPOC that starts on January 1st, 2013, and the full session VPOC, which is 52. So 52 and 42, very two important numbers inside of this distribution zone. And then our weekly downside ATR target is still down. It's actually moved up a bit to 49. And then 42. So nothing really changes below in terms of our levels. So what's my main hypothesis? Well, the pressure is still to the upside in my mind until we get back below the 63. So we're going to open up inside of range, inside of value if we, we still have another 25 minutes or so. So we could make a move and open up outside of range. But my main hypothesis is open auction in range, chop inside of here, come down, take out the overnight low, take out the naked VPOC, test the 83, find buyers, initiative buyers down here, and then rotate up through, take out the 95, 75, and come up into the holiday session and chop around here in the 2100 with possibility of a probe up into the 21s and possibly the 2109 area. So Hypo 1 is open auction in range, move down, find buyers somewhere between the 86.75 and the 83.75, rotate up through, break out of the prior day range, take out 95, 75, and 98.50, and then chop around in the 2100s with a late day probe up into possibly the 2106, 2109 area. So that's Hypo 1. Hypo 2 is a open auction in range, in value, a breakout up into the 98 to 2100, test into the 2100, fail from there, and then rotate down through the to the 86, chop around in the 83.75 area and get possibility of a late day probe down towards that 73 and chop around in around that 79. So Hypo 2, open auction in range, in value, push, breakout, fail to hold the breakout, rotate down through and chop around the 83, 86 level, and then get a continuation wave and chop around into the close in around that 79 with a possible test of the 73. Hypo 3, open auction in range, move down, chop around in the 83 level, come down to the 79, chop a little bit more, and then push through to that 73, and then possibly get a late probe down into the 61 area. So Hypo 3 is a failure to break out, move down, chop around between 83 and 79, and then get a probe down into the 73, break the 73, and get a late day probe down towards the 61 and take out the prior day low at 65.75. Hypo 4. Hypo 4 is an open auction in range, come down, chop around here, but get a strong move up, chop around the 2100, and then get continuation and push up through up into the 2119.50 and put it a new all-time high. Why do I have that as a hypo? Because it's within our daily range right now and our weekly range. It's Thursday. We haven't tested the weekly range low, and we've got the possibility of going up and expanding the daily range and making a new all-time high. So Hypo 4 is open auction in range, find buyers, break out, chop around in the lower 2100s and push up through to the 2119.50 and make a new all-time high. So that's my 4 main hypotheses. Taking a look at the Keltner, right now we're just bounced off the upper Keltner in that 94.50 area. So we're back below that key line in the sand at 93.75, and a Keltner center line test is 91.50. If we break below that, a push to the lower Keltner is going to take us down to the 88.50. Taking a look at gold, you can see that gold is finding some balance again, as we were talking about, finding balance. I thought we'd balance a little bit higher in around the 77, but we rejected it. Current balance is up here at 70.20, but we're back below the CLBN at 1362.90. As long as we hold below this, look for them to come back down to the 1352.53 area. And if that doesn't hold, look for them to push through. We've got double distribution down here, and the value area low is down in the 1340 range. And I wouldn't even be surprised if that doesn't hold to come all the way back down into the 1323 area. But right now, gold is still showing some strength. Anyway, that's what I'm looking at. As always, trade well, trade safe, and we'll catch you on the flip side.